With mortgage demand lower, our next guest says it should rebound as affordability improves this year. Let's bring in Andy Walden. He's Vice President of Enterprise Research at ICE. Andy, it's good to see you again. Am I saying that correctly? You do actually expect things, affordability to get better, buying demand to pick up?
Yeah, I think gradually as we move throughout 2024, if you look at the interest rate forecast, they're for rates to come down about 0.5% throughout 2024, should give buyers about 5 to 6% more buying power and should improve demand. And I mean, it's really hard to take too much away from the couple holiday weeks there. But if you look from October, when Diana was mentioning rates got up near 8%, through the end of the year, we have seen demand rebound a little bit gradually. And roughly, if you adjust for kind of week-to-week comparisons, we're at a similar level to where we were back in May, the last time interest rates were at 6.5 to 6.75%. So borrowers very much behaving like you would expect them to behave in a mid to high 6% rate environment.
One thing I always think about, though, and maybe you have the data handy, Andy, or Diana does, but is there's so many more either cash buyers or people to whom this is not the swing factor, and again, you wonder how much that has played a role in the way the whole economy has responded to rate hikes.
Yeah, I mean, certainly you're seeing more of that. Now you're seeing cash buyers even back out a little bit, but they're certainly making up a larger share of the market just because of the compression you're seeing in mortgage demand out there. So a little bit more cash dominant world than we've been in the past, but you're seeing some compression in demand across the board.
Yeah. Diana, what would you add to that?
Well, I think it's going to be all about supply, because when you say rates are coming down a little bit, maybe 0.5 percentage point, do we get into the high fives at some point? It really depends on the supply. And will the seller, we've talked about this so much today with these mortgage numbers, will the sellers finally decide that they're willing to trade their 3% or lower rate up to a 6% lowish rate in order to get into the market and put more inventory on there? That's the only way we're going to see affordability. But, Andy, I don't see that really happening unless rates came considerably lower, which that's not really in the forecast.
Yeah, and we haven't seen that last year. I think that was kind of the thought process. We moved into the 2023 home buying season. Falling rates should improve inventory and sellers' willingness to sell. We haven't seen sellers move with rates at all. You certainly see a very linear reaction from buyers. They react as you'd expect to rates. I haven't seen any signs of sellers moving with rates getting down into the 6% range last year. So maybe if we get in the fives, that changes. Maybe this year's different. We just haven't seen that actually play out in the numbers just yet.